Hey guys, welcome back to the channel McNallie Money, the official home of power analysis. A great episode in store for you today. We're going to be taking a deep dive look into balance sheet valuation metrics, including net asset value, market cap, and enterprise value. We've got a lot of data to get through, plus some top stories or headlines in the sector. Before we get into it, take a second, smash the like button, guys. Big help to myself and the channel. Anthony absolutely loves it. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below what you think of today's data and your top pick in the sector currently. With that being said, let's get into today's video. Okie doke, guys, away we go. An exciting episode in store for you today, Thursday, January 8th. We're going to be talking about Bitcoin price first and foremost, then a couple of housekeeping news items, and then moving on to balance sheet valuation metrics. You've brought along some charts, tables, analysis on enterprise value, net asset value, and market cap. Really allowing us to compare and contrast a lot of the companies we talk about on a regular basis. So with that being said, you guys, first up, Bitcoin now over $91,000, Anthony. Nice to see us moving further away from that $90,000 level, and we're still anticipating a big Q1 here for the top crypto in the world.
Yeah, as I say, we spoke about it all week, about the volatility, but it's nice to see a move upwards today. We had a couple of days in retreat, and now looks like, initially today was even down further, and then we've seen a turnaround in the last hour or so. So, as I say, above that 89,000 level at the bottom there, and yeah, let's hope it continues. But very bullish on Bitcoin at the moment. I bought some not too many weeks ago to add to the wallet, and yeah, I've not sold any, so that's a good point. And I'll keep buying at certainly at these prices. I think long-term aspirations are it will get significantly higher. From a time perspective, I've got no idea how long it'll take, but I just zoom out and look at the 1 year, 5 year maximum graphs, and you'll see the sort of the longer term analysis where it goes in literally one direction, which is upwards. So
the trend is your friend, they say, and the power family HODL continues to grow there, which is great. Now, moving over to the miners, you used the word volatility. Yesterday, you brought up the fact that when we see a 1 or 2% move in the price of Bitcoin, we often see an outsized move in the price of miners. Case in point, today, we've got some strength on both the HPC AI side of things we'll talk about. We've got some insider buying and obviously Bitcoin creeping up. The miners having a very strong session, similar to what we saw at the start of the week. IREN up in excess of 8%, followed by DMG Blockchain.
Yeah, a good day for the miners, predominantly all in red with bar a couple of exceptions. So very positive. Most of the miners were actually down earlier, so you can see from the day range there that the majority of miners are currently at their day highs, which is a positive position to be in there. So IREN leading the way. That's had a pretty topsy-turvy week actually, IREN. It's been down in that sub 40 range and been above the 40 range. And I'll be honest, the bulls are out there and promoting everything about IREN, and who can blame them? We've been to the site at Childress, phenomenal site. Really takes your breath away when you look at all the buildings in a line. Then you can see the curvature of the earth and just the sheer size. It's a mini town, to be honest with you. The amount of people working there, the vehicles, it's just literally outside the small town of Childress, which is a population of just about 6,000 people. But believe you me, the Childress site is one to behold, and it's opposite across the road from a solar farm. So I didn't realise that until obviously we got there, because we've never seen the photographs of that there. But there's an enormous solar farm literally on the other side of the highway there as you enter the Childress site. DMG having a great day as well, up 7%, and we've been very positive about DMG. We'll talk more about DMG during the podcast, because there's certainly one that we've said for the last couple of years. They do things in a more measured way. They're not rushing out to get significant amounts of debt and try and buy their way into strategies. They do things more. Sheldon Bennett's probably one of the OGs in the space. He's been around longer than everybody else. Probably certainly as long as Ben Gagnon's been mining, and he's certainly been in the industry a long time. So I think them two there pretty much, have some of the most experience. Sheldon's not just built DMG, but he's responsible for things like the Mara pool. He helped with the design and infrastructure at Rockdale for Bitdeer, and he's done a number of other innovations throughout there. Remember, we talked about immersion cooling a couple of years ago. It was Sheldon's. He did a paper on immersion cooling 4 years ago, and the information he'd used from testing immersion cooling was proved to be very, very accurate. And you can see a number of miners have utilized that technology. So great to see that share doing well. Bitfarms, a popular share with everybody. And their share price up there, along with Wulf and Cipher. Remember, some of these shares we're talking about now were at the bottom yesterday, massively in the red, but we've seen a bit of a turnaround, so that's positive there. And as I say, these days are nice to see, and we like these days. But believe you me, it will get a bit more topsy-turvy before we see any more all-time highs from these shares.
Yeah, it certainly will. It's a tough ride to stay on, but it's an exciting one along the way. Now, we wanted to do some housekeeping here before we get into the main event or the metrics. First up is Soluna. Again, fortunate to go down, see the site in November, harnessing the power of wind in Texas, which there's no shortage of. Now, they've announced a partnership today with Siemens to essentially test out and pilot their 2 megawatt Grace project, which is on the same location as where we were able to visit. So this is an exciting development. Again, a step forward on the HPC AI side of the farm here for Soluna, and a great move for the company.
Yeah, we were lucky to go to Silverton, and the journey to Silverton from Childress actually took a couple of hours along some nice scenic routes there. And what stood out from doing that journey was the amount of wind power all the way towards Silverton there. We must have saw, I don't know, countless sites, enormous sites. And to be honest with you, one thing that was noticeable was most of them weren't actually switched on. So when we got to the Silverton site and we were met by the Soluna team and a couple of representatives from some of the power companies in the area, we asked the question about power, and they said, look, when we're not using power, we're not creating power, because it's pointless to create it if you haven't got a use for it. So there's a real issue here, and I think Soluna have tapped into the fact that, if there's power there, they've got projects and strategies that can use that power. Now, Dorothy 2, which is or the Dorothy site for hosting Dorothy 1 and Dorothy 2 at Silverton, is 98 megawatts of mining. And it's because it's a 100 megawatt site, that leaves 2 megawatts over. This is the 2 megawatts that Project Grace will sit in at that site there. We've seen the location on the site where they're going to establish this effectively, this model. And this model is going to help them understand about, effectively the load and the usage. So that can determine when they want to grow this model into bigger sites alongside some of their other sites that they're actually building out at the moment. They have a really good understanding. Remember we said before about test and see? This is a 2 megawatt site. Now, the benefit of this site here is that they've actually collaborated with Siemens to solve this GPU power swings behind the meter. Now, behind the meter for Soluna means it's using the wind power there. They have access to grid power when there isn't sufficient wind power. And we did ask the question at Silverton, Bryce. We said, when we have a good month for wind power, what sort of breakdown in terms of wind versus grid power is the company using? And they said sort of in excess of about 80% wind. And on a bad month, it's down to about 50% wind, 50% grid. So you can see when they've got a high proportion of wind power, their average cost of power will significantly drop. And I think now utilizing and understanding more about this particular project gives them an understanding at their other areas, because at their other areas, they're also located close to wind farms. So this is a real positive step further. This is more that we've heard now than we've seen in some of the other in some of the other test and see project cases, because they're really coming out and explaining not just a case of putting in a GPUs into a building, but they're actually explaining why they're going to do it, what's the benefits of this project, and how they can deliver it at scale at other sites in the future, Bryce.
Yeah, kind of a case study, almost reminiscent of what you just said with DMG and the immersion study, but now testing AI HPC compute behind the meter with renewables. It was comical while we were driving up. You mentioned all the wind farms. For those of you who don't know, Anthony's a big music buff, so he was singing along the way. Every single wind farm, I'd turn down the music and say, Anthony, is this Soluna? No, is this Soluna? So interesting. But to your point, yeah, no shortage of wind farms. And if they can crack this code, so to speak, there's a lot of opportunity. We also heard from the team they have wind farms approaching them for partnerships as opposed to them trying to find these elusive megawatts or sites like some of their peers. Now, the next story here, Anthony, we love to see this. They say there's a million reasons to sell. There's only one reason to buy. Asher Janute, Mike Ho, both shelling out in excess of $30 million each on ABTC shares today.
Yeah, this is a big purchase. I mean, we've seen some of the CEOs buy 20,000, 30,000 shares here. I've yet to see, and we've seen Paul Prager. Let's give Paul his due at TeraWulf there. He made a number of purchases of shares, albeit when the share price was in that sort of 50 to 60 cent range. He was buying a million shares and telling everyone, look, I'm the CEO, I'm buying shares, I believe in the company. And look at where the share price is today. It's massively increased. This is exceptional buying. $30 million of shares purchased for each of them, and one the chairman, one the CEO of the company. So you don't get two bigger board members than those two. Albeit there is a couple of special advisors who most of the world understand. That's the sons of the President of the United States. But this is a big sign to the market here that they fully believe in what they're doing there. They can see the value of the share price. They bought these shares on the market at $1.40. I think when I watched earlier today, it was probably over $1.60. So already benefiting from that there. So. And bear in mind, they have to plan these purchases. They don't just come out and say, oh, today's a great day, I'm going to buy these shares. They have to sort of like plan these purchases, and they produce the paperwork in advance, and they basically, on a given date, the purchase is made. And they can't do it during things like earnings calls for obvious reasons, because they've got access to information that we generally haven't got access to. And on the channel here, we have many conversations with CEOs and chairmen of all the mining companies. And, we're not interested in finding secret information, but what we do like to hear is understand, when they announce something as to the impact of that announcement and to explain in a bit more depth. That's what we're looking to try and provide. We're not looking to try and provide, hey, we've got the scoop here, this is what's happening on this site, and before it's announced properly. That's not our game. We want to sort of like be there when the announcement's made to say, actually, we'll cover that, in very, very quick time and get a broader news story out there. So that's from our position there. But this is a massive purchase. 23 million shares. I just wish if I looked under the mattress how much money I'd have to buy a few shares in ABTC. I don't think I'll be able to buy that many. But good luck to both of them. They obviously believe in the company. Asher has been on the podcast many, many times. Is a great fan of the podcast. We enjoy having him on there. I was in Hong Kong early last year and met him at the Bitcoin conference in Asia, and we had a great chat. And he was telling me, all the good things that are going to be happening, and everything that he said is coming to fruition. Remember what he said when we first brought him on the podcast? Judge me in Q3 2024 when I've started to deliver what I've planned. And we did, and he got an A grade on his school reports. And I think, in 2025, he's excelled that there. And you can see the benefits of having ABTC as now the subsidiary, and they clearly identified the strategies for Hut 8 and ABTC, have a great team on there that are putting the work in to get these companies where they need to be. And I think it's been a success. Let's hope 2026, having bought that many shares, brings more success for them and for the shareholders.
The thing I'll say about both of those guys, Mike and Asher, extremely intelligent, extremely high achieving, on the Forbes 30 under 30 list. These guys are no stranger to hard work and good ideas. They get things done, and that's exactly what we're seeing out of ABTC. Now, just as you say, we don't like to talk about rumors, Anthony. We did get a little bit of a headline out from Illinois talking about HUD 8. So you just mentioned ABTC being a subsidiary. HUD 8 was in attendance for the meeting, talking about a potential data center, $4 to $5 billion, 500 megawatt construction. So this is one we're keeping a close eye on. Not a lot of news available at this point or information, but a great example of what you just talked about, the team taking action, executing, and continuing to grow that pipeline.
Yeah, and if this is a, if there's truth in this story, in Logan County where the facility is planned on a sort of 500 megawatt center, um, there's a proposal for a 600 megawatt facility, and Greg Irwin, who's the senior vice president of energy at Hut 8, he's actually commented saying we're in the top of the first innings here. We don't exactly know. It may not be AI, whether it's training or inference at all. It could be cloud-based center. But it sounds like, if you've got that level of individual talking about it, there must be an element of some truth there. Finally, Cyrus One estimates a 500 million construction cost, whereas Hut 8 anticipates an investment of 4 to 5 billion. In terms of employment, Hut 8 expects to create 200 permanent jobs, and that's the great thing about these companies when they go into these areas. Childers, we've mentioned already. Using many of the employees from the local area, all within sort of like a 45 to an hour's drive of Childress there. The same at Corsicana, the same local staff at Granbury. We went to see the Mara site there, and also the same at Soluna. These are big sites, have a lot of employees, and you want to try and attract talent from the local area because it gives you a good presence in the local community. Remember, these companies don't just operate in these areas; they're part of the community as well. So, bringing those jobs to that area, in terms of staffing and also in terms of tenants available at that site there. This will be a positive move, and also they'll be doing so much more for the local communities in terms of sponsoring, in terms of injecting funds into maybe some charitable events or sporting events or school events. This is what all the miners do. I could sit here for a couple of hours and go through each miner and tell you what they're doing outside of what they're doing from a work perspective. And I've been to many sites now, and I've seen it in action as well. So I was fortunate to go to Sweden, see what Hive do there, sponsoring the local teams, sponsoring the big ice rink there for ice hockey. Had the logo in the middle of the ice there. Really impressive. But they put a lot of energy, a lot of effort, and also a lot of funding into these. It's not just done willy-nilly. They really do care about the communities, because at the end of the day, having that great relationship with the community, getting those great teams to work with them produces a great business model, and that's what all these companies are trying to do.
Yeah, it certainly is. And we just read about Hive, some of their partnerships in South America as well, partnering with the school board there. So it's great to see. And another thing, you talk about injecting dollars into the community. You can see HUD 8 expecting 8 to 10 times the spend of Cyrus One. So another competitor, I guess, or another data center company operating in the area. You can see the amount of investment that these miners are injecting. Now, on to the main event here, Anthony. We've done a number of episodes talking about HODL to market cap. We've looked at MNAV in relation to some of the DATs. We've got a lot of discussion, a lot of great comments, wanting to look a little bit deeper into some of these valuation metrics. So you've brought along a couple of your tables and charts. We'll walk through some of the graphs first. Again, prefacing this with these are standalone metrics. There's a lot more to the story than meets the eye. Things like future revenue, the contracts we've seen signed, et cetera, et cetera. But this gives us a pretty well-rounded look at the MNAV, the enterprise value, and the overall market cap in relation to the peers of this sector.
Yeah, we just thought we'd use a bit of time today where there's not a massive amount of news out there to highlight some of the balance sheet ratios in terms of balance sheet strength, looking at liquidity, looking at debt, looking at market cap and net assets, and also enterprise value. Some of these terminologies that you hear, but not quite sure what they mean. We'll try and go into just a little bit of detail and explain them. Current ratio, the first graph you can see there. This is all about having enough cash during the 12-month period to cover all your obligations. So a bit like your housing budget, you get paid your salary. You want to make sure your rent or your mortgage is paid there. You want to make sure the food and the utilities are paid for, your car loan, your mobile phone, have some money in investments. At the end of the month, hopefully you have a little bit left over or you haven't overspent. Companies have to do the same as well. So companies, need to ensure that they have enough in their current assets. So the current assets, effectively, any asset that can be converted into cash in the 12-month period. And so that's why it's called current. For long term, it's anything over 12 months. So when you hear the term current, it's all about the current 12 months. So the current ratio, which is a liquidity ratio, it tells me straight away who has sufficient cash to cover their current liabilities. And what we do is we divide their current liabilities into their total current assets, and that gives you a ratio number there. Now, if we just look at this, for example, here, Bit Digital, remember we had Sam Tabar on just a couple of weeks ago talking about the fact that they have no debt, and they literally have zero debt there. They do have some, what I would call current liabilities. So they have liabilities that they'll probably pay off in the next couple of months. So they do have sort of like some short term, you could call it debt, but it's really just liabilities that they'll pay off there. They have 17 times or 17.53 times more current assets than current liabilities. So we know from their balance sheet, it's very, very strong. In fact, you could argue, Bryce, it's too strong. I mean, if you had that much current assets, what are you doing? Why are you not utilizing the current assets to maybe drive more? But bear in mind, these companies are very reactive and things can change very, very quickly. So I don't want to sort of like start criticizing anyone for having a very high ratio versus anyone that has a very low ratio. Remember, this is one metric, and we'll probably cover today 4 metrics. Before you start making your mind up about these mining companies, you want to look at about 15 to 20 metrics. Don't just look at the balance sheet. You want to look at potential revenues going forward. You want to look at potential profit margins going forward. You want to look at a lot more than just some of the balance sheet ratios. But we thought with having time today, we'd cover some of these. Hive, again, very, very little debt in comparison. 10 times as much current assets to liabilities there. They've got no problem. And Wi-Fi, who are a subsidiary of Bit Digital, so again, Bit Digital having the most, Wi-Fi also having strength to clear any small amounts of pockets of current liability, small amounts of debt on the balance sheet. They can do that ratio 6.34. Now, moving further down the list there, the ideal scenario for many companies, if you're just looking at companies there, is having something slightly higher than 1. If you've got enough current assets to pay your current liabilities, that's the position you need to be in. If I get paid $100 and my bills are $98, I'm happy at the end of the month. I can meet my 98, but got a couple of dollars left over. And so, same with companies. If you've got a bit left over, you're in a good position there. And there's not too many that are actually below zero. So below zero means that at this moment in time, and actually both of them we've just discussed in a bit more detail actually, Hut 8 and ABTC have a current ratio of less than 1. Now, I don't want people running at me saying, Anthony, can't afford to pay the debt. What's going to happen? No. It means at the moment they haven't got sufficient current assets to meet their current liabilities. However, bear in mind, Hut 8 has a significant strategy that's going to delivering AI and HPC, and ABTC has 25 exahash of miners operating there, majority of which in Texas at the Vera site. And that will be bringing in significant amounts of revenue. So they will have revenues coming through at their Vega site in Texas. And so, don't get too concerned that, they have, very little in terms of assets to meet their current requirements. If you look at another industry out there, look at supermarkets, their current ratio is really low because they turn over so many products. You know, if you look at a big supermarket, maybe say like Walmart or whatever like that, and you look at an item, I don't know, a tin food item like that, they might make, 5 or 6 cents per tin. They're selling millions and millions of tins of a day of maybe soups or beans or whatever the deal is like that. So the liquidity is actually in the generation of cash coming through on a daily basis. You could argue that with ABTC, because they're mining Bitcoin, they're probably mining, we don't know, we don't get the monthly updates, but I would suggest they're mining probably close to 9 to 10 Bitcoin a day. And if you see their Bitcoin hodl, it's gone way over 5,400. They're in the top 20. I think they're 18th at the moment. Not too far behind Hut 8, who are sort of, I think they're 10th on the list at the moment there. So don't be too concerned about that there. But if you were looking at this really from who can meet their current requirements, if things had to stop today, who could liquidate and pay off their current debts there, then you want something above 1, which the majority of these companies have there. But as I say, do not take this in isolation.
Yeah, appreciate you walking us through that, Anthony, and great to see from that lens. Now, the next graph we have debt ratio, another interesting angle to take a look at these companies from.
Yeah, and so I've put a little explanation there, the debt ratio, which is really how much of a company's assets are financed by debt. And so for every pound of assets that they have, you can see what ratio that is to debt. Now, Bit Digital, we know, as we've already explained in the previous slide, have got very little debt. So for every dollar of asset on their balance sheet, they have 8 cents of debt. So very, 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 very small amount there. However, if we then switch to the other side of that, with the likes of TeraWulf, don't have a significant amount of net assets on the balance sheet, but they do have a significant amounts of debt. Remember, they've been taking advantage of going to the market, getting these convertible notes in place there to drive their sites ready for delivering HPC in 2026, 2027, and so on and so forth, and grow that strategy. So the only way to do that, you have a number of levers. You can sell shares, which they've tried to avoid doing that. You can go to the market and borrow. And because they have contracts with Fluidstack supported by Google, they've been able to get really, really good rates of interest. So again, I don't want people rushing to say, oh, that TeraWulf, again, they're looking, they've got so much debt there. There's a reason they've got debt there. They're delivering a new strategy, which is not a cheap strategy. They've had to go out to the market and get over $4 billion of finance to cover not just what they're doing themselves, but also they have a JV in Texas with Fluidstack as well. So they've also managed to go out and meet that requirement there. So from their perspective, yes, at the moment it does look quite significant. But what you'll see is as they start developing these sites, the value of these sites will come onto the balance sheet and you'll start seeing that debt ratio reduce there. And also the fact that what we'll see is we'll see the massive amounts of revenues coming through, delivering these contracts, and then helping obviously to pay the finance of the debt there. And then at some point in time there, they'll be able to reduce that convertible notes. Like we've seen a number of companies do that. They've actually replaced older convertible notes with better convertible notes once they've got deals signed with certain hyperscalers, because you're going to get more preferred rates of interest. So again, the lower is good. Hive, again, they're a top performer. Very little debt on the balance sheet there. Wi-Fi, we've just mentioned Wi-Fi and Bit Digital. So again, some of these companies that had good current ratios also have good debt ratios as well. But it does highlight very, very quickly those there. Now, people say to me, I get a lot of comments about Mara. They've got so much debt. Well, actually, Mara's not too bad. 77 cents of debt for every asset on the balance sheet. So, not too extreme. And when you look at the size of the company and what they're delivering, they've got 60 exahash. They're now looking to focus also making sure that the power they're using at the moment, and they have significant power with a pipeline even more impressive going forward. How much can they actually get as a return on that investment using a number of different strategies? And so they're also quite, without saying they're going fully into co-location or CSP deals, it looks like we're going to see Mara do something very much more in the HPC space than they were announcing probably 6 months ago, when they were really, the last of the couple of pure play miners along with CleanSpark, and both have literally 180-degree turn on this and are now keen to develop as many strategies to deliver the best rate of return on the power assets they've got, because both of them got significant assets there. But I just thought I'd put that in there. Mara don't come out of these ratios as bad as some people are expecting. So that's the debt ratio. Hopefully it gives you some understanding.
Yeah, it certainly does. And I'm glad you called out those future contracts, because you look at Wulf there, you got to consider they have multiple massive co-location contracts coming online shortly. Now, the next one, Anthony, you talk about Mara. We've done a lot of these videos, HODL to market cap ratio, specifically highlighting in many cases that Mara was trading below their HODL value. Now, like you just mentioned, we've got a lot of comments saying, well, you got to factor in other things like debt, the convertibles, whatever the case is. So you've put together net asset value to market cap. This really takes into consideration all of those components. I'll let you walk us through the numbers here, but this is another excellent metric to take a look at.
Yeah, it's a good metric. So really, this takes account of debt, because this is looking at the total amount of assets, taking away the total amount of liabilities. That gives you a net asset value for the company. So if you were to stop trading today, what's your company effectively worth with the assets that you have left on the balance sheet, having paid off all the liabilities in favor there? And then you look at that compared to how the market values your company. That's the market capitalization. So, who's got a good asset value compared to the market? Who's not getting enough credibility for the assets they've got there? And this highlights, quite a few things. And similarly, some of the way this turns out is very similar to when we've done the Bitcoin HODL to market capitalization. If you look at some of the companies at the top there, it's because they have Bitcoin HODL. And DMG, being a small Canadian mining company that's looking to progress into HPC, this 65 megawatt site there, they have a significant HODL for the size of the company. I mean, bear in mind, the market capitalization is probably under $40 million as we speak today there. They've got not far short of that in Bitcoin on the balance sheet. Plus, they've got all their power assets and all their mining machines. So effectively, what this chart tells me is for every dollar, if I was an investor in DMG, for every dollar, I've actually got access to $2.09 of assets, because that's the asset value over the market capitalization, which is affecting my share price. Bit Digital, again, they're because they've got very little debt there, the market isn't giving them enough credibility either. Bear in mind, they've made some fantastic announcements recently in HPC. They were the first to announce what I say was a really big client. They're a $50 million annualized revenue client going back 18 months ago. So they've grown that one client now. They've got over 23, 24 clients. They've even got their own HPC sites now. They're going full steam ahead and driven, a really, really good strategy. Now, their asset value there for every dollar invested in Bit Digital at the moment, $1.47. And Mara come in third there. So a lot of people are saying, oh, they've got so much debt. Well, for every dollar you're investing in Mara at the moment, you're getting $1.33 of net assets. That's your total assets less your liabilities. That's incurring all that debt that they have on the balance sheet. And it's not as high as people think, to be honest with you. At the other end of the scale, we know the likes of TeraWulf have a very, very small net asset value. The market really has given them a fantastic valuation. Now, that valuation isn't based on assets that they currently have. It's based on the power that they're going to put towards HPC and these contracts that they've got in place there. Over 400 megawatts of compute power going to these providers over the next sort of 18 months, 2 years. So the revenues will start coming through. And that's why TeraWulf have been given a phenomenal market capitalization. So in terms of, if you were to look at the same principle here, at the moment, for every dollar I'm investing in TeraWulf, I'm only getting 5 cents of assets. Well, you are only getting 5 cents of assets, but you're getting access to a company that's going to start bringing in, hundreds of millions of dollars of revenue at very, very good margins over the next sort of 20, 30 years. Because these contracts aren't 3 or 4 years long. They're a minimum, in some cases, of 10 to 12 years with maybe 2 to 3 5-year extensions. So it's not unusual, 20 to 30 years, if you look at the total period there. And the great thing about TeraWulf is they're continuing to grow. They've got more sites coming online. They're doing this already. They've done the test and see. They're starting to build out significant parts of the business now. And we'll start seeing in 2026 their revenue start to increase. So they've still got a small Bitcoin mining business that's turning over, giving them cash flow. They're selling the Bitcoin on a daily basis to cover operating costs and probably add to their capital requirements. But one thing that they have done more so than anybody else is, as soon as they landed a contract, Patrick Fleury and his team have been out there making sure that the market is now getting ready to sort of like deliver them the necessary capital to build out these contracts that they've signed up, and they have all the funding in place. They don't have to go anywhere else now. They've literally got all the funding in place there. This is why some of their metrics look bad today. I would take, again, don't take one metric in isolation, especially when there are other reasons for it. And we always say that, we can highlight one metric and make every mining company look the best from that particular perspective there. But when you start adding metrics together and coming up with a cross reference of maybe sort of like 15 to 20 metrics, and miners start having strength in all these areas, that's when you're seeing sort of like a real position there. And I've done that in previous articles, and you can see from the past there that some of those companies that were at the top, and IREN was one of those that was generally at the top there. Look at what IREN did over the last few years. I've covered IREN for the best part of the last 4 years, and done many articles on analysis of not just one metric, maybe 12, 13 metrics, and they've tended to come out close to the top, along with the likes of CleanSpark and the likes of Riot and the likes of Bitfarms have done very well as well. So, as I say, isolation at your own peril, but when you start putting together a number of these metrics, you start getting a picture, an overall picture, and that's what you want to see as part of your due diligence.
It sure is, yeah. And Google takes a 14% stake in TeraWulf, so they obviously have a high conviction in that team to execute. The next chart here, similar, a little bit of a variation, net asset value now to enterprise value.
Yeah, and we've used the enterprise value. Some people are saying, oh, but the market capitalization doesn't really take account of debt. The enterprise value certainly takes account of debt. Because to calculate the enterprise value, you need to firstly have the market capitalization. To that market capitalization, you add the total debt on the balance sheet, but at the same time, you take away all the sort of like the cash holdings and anything that can be liquidated really quickly. And so therefore, Bitcoin and Ethereum can be liquidated very, very quickly. They're included in my cash and cash equivalents calculation for the enterprise value. So again, it's just another table, and to be honest with you, it comes out very, very similar to the market capitalization. You can see it, at the top there. We have the likes of, Bit Digital, DMG, Mar as the top three, and towards the bottom there, Cipher and TeraWulf again come out in that bottom two range there. So don't play too much. Again, it's a symmetric. But for those people that prefer the enterprise value, we thought we'd include it today there. There are other metrics out there that are worth looking at when you can start calculating future EBITDA. Then use enterprise value divided by EBITDA to give you a multiple, then to sort of like start looking at how share prices can be calculated going forward. That's another metric that a lot of the analysts on Wall Street use when they come up with their calculations for share prices. We see these updates on a sort of daily basis, and we try and include a few of them on the channel just to say, like, I think the last one was CleanSpark. We had an upgrade from CleanSpark there, $23. Now, that figure's not just plucked out the sky. These analysts will go in and look at a number of metrics, and to be honest with you, they'll look at the future expected revenues and calculate the future expected costs. So you get some sort of an EBITDA figure there, and then they'll look at the enterprise value and do some analysis there. Look at the multiples for mining, look at the multiples for HPC, look at the multiples for different types of the business, and then they'll put together those areas there to come up with a share price. We have covered this on the podcast before, so go back and have a look at when we've done this before. We did a really a deep dive into how some of the share prices were calculated, and we will come up with similar numbers to these analysts. So it's not total rocket science out there. There are ways to do it, and you can get a lot of information on social media, a lot of information on YouTube, a lot of information on Google to help you start the process. And we'll probably do another episode where we look more into the EBITDA enterprise value to start giving you ideas of, are these share prices at the moment, value in terms of what the market sees, or with the signing of more contracts in 2026, are we expected to see some share prices increase? And we'll probably do that as a sort of like an educational understanding of, again, a different type of metric.
We certainly will. Yeah, a lot of requests for these data heavy videos. The final chart we wanted to show you, just kind of the amalgamation of some of these tables. You can see a full list based on market cap, highest to lowest, of all of the companies we cover on the channel. So this is just a great overview. Feel free to pause the video if you guys want to take a closer look. Anthony, any closing thoughts on this segment? Anything stand out in your mind?
No, as I say, if you look at the overall ranking, this is just based on balance sheet strength as we see it at the moment, and has nothing to do with anything going forward in terms of, we know the likes of, IREN, Cipher, TeraWulf, HUT, Core Scientific have signed these enormous deals. But if you look at the balance sheet or the latest balance sheet that these have issued, and their current sort of like market cap enterprise value, this summary table shows the enterprise value, and you can see there that if you were to look at this as a standalone few metrics, Bit Digital actually come out in first there, and they have very little debt on the balance sheet, so they're going to appear top in most of the metrics. Closely followed by Hive Digital. Now, Hive, we focused on Hive before. They really don't seem to get too much credibility from the markets. Now, part of this, might have been the fact that they're a Canadian. They're now sort of moved offices to the US, and hopefully that's improved. They've increased their hash rate phenomenally this year. 6 at the start of the year. They're already over 25 exahash, with a plan to grow another 100 megawatts at the Iguazu site in Paraguay, which will give them probably getting close to maybe 30, 35 exahash. So they're still fully focused on delivering that as a strategy. At the same time, they're growing their high performance compute strategy, 20 million of annualized revenue, growing to 120 million by the end of 2026. So big revenue jump this year. We'll see both of those strategies significantly improve, and hopefully the market starts giving them more credibility. But at the moment, they're just behind Bit Digital. In third place, Wi-Fi. Again, part of the Bit Digital family, no debt on the balance sheet. So again, they're going to score really well. DMG. I mean, what can we keep putting the plaudits at DMG there. They have got some debt on the balance sheet, but it's very, very small. They just do things in a more organic way. So they're not going to rush out and do what IREN or Cipher or TeraWulf are doing there. They're looking at utilising that 65 megawatts at Christina Lake in Canada. They've also got their eyes on other sites. There's a site in the US as well that they're looking at there. But they do things in a more managed way. They'll go out there, they'll make sure they have sufficient capital in place. And believe you me, 65 megawatts, if you're going to deliver 50 megawatts of compute power there, and even if you're doing a co-location deal, and we start using some of those multiples, is it 8 million a megawatt? Is it 10 million a megawatt? Let's say 10 million a megawatt, just to make it nice and round. That's $500 million For a company that's only valued at about $40 million at the moment. So the challenge for DMG is how they raise that capital to deliver, that type of there. Is it going to be more of maybe in a joint venture, something like what Soluna are doing, going out there, looking at what options are to raise the capital. But, even if you've got small sites, you're looking at enormous amounts of capital to deliver those sites. And that's going to be the challenge for some of the miners. The IRENs, the Ciphers, the Wulfs, the Core Scientifics, the Maras, the Riots, they've probably got enough cash and reserves and enough levers. We talk about levers to pull to deliver this, and they're not scoring as well on these charts. But believe you me, if we were to look at the future and bring in other metrics, I think you'd see some of the scenarios change around a little. But don't underestimate some of those companies we said there in the top there. Very low debt, and looking at strength in that particular area of balance sheet strength, which is a mandatory requirement for companies. If you want to do anything, your balance sheet needs to be strong, and certainly those top four, top five companies there, very, very strong balance sheets.
Yeah, cash is king, they say. We appreciate you putting all the work into that, bringing those tables along. Let us know your thoughts in the comment section below. Now, the final thing we wanted to look at today, also data related, hash rate index. We can see block time slightly above 10 minutes. We do have an expected difficulty reduction in about 2 weeks' time, but unfortunately for the miners, that hash price still hovering in the $40 range.
Yeah, we'd like it above $40 just to give a bit of respite and get, slightly more margins. Remember, a lot of these mining companies now are using this next 2 years for cash flow from the mining strategy to start getting them prepared as they move into HPC before the next halving. You're quite right. The difficulty adjustments in 2 weeks' time, or just over 2 weeks' time, is taking 42 seconds longer to mine a block than it should do. So based on this very, very early prediction, they're saying at the moment about 6.65% reduction. That would be great for the mining companies, because that means they're effectively going to be able to produce that little bit more Bitcoin than they were in the previous 2 weeks, because difficulties down there. Fees still in that sort of less than 1% range. It's not really helping miners. I remember 18 months ago in Nashville that we heard the expectation, if the hash price drops significantly, we might start seeing fees increase to basically cover the miners and give them some sort of a margin to deliver what they do, because they provide all security for the blockchain. If it's too expensive to mine, you're going to see big miners coming off the blockchain, and that's no help. You need to have the block stabilized. You need the miners to do their job. But we're not seeing any sort of effectively respite for miners. It's the hash price has been coming down. Remember, pre-halving in 2024, we saw the hash price over $110, and today we're talking about it. Hopefully, it can go over $40. That's where we are now, literally 18 months later.
Yeah, it's been a difficult time for the miners. And again, transaction fees just not coming in where we expected. Network difficulty, global difficulty really rising rapidly, I guess, ahead of many people's expectations. But again, let us know your thoughts below, specifically on today's metrics and analysis. Who do you feel is positioned best in the sector currently? We'll see you guys back here tomorrow. Hit the like button. Feel free to subscribe. Thanks so much for watching.